Hey traders, Nick Shaheen here. Create income with options spreads on MarketFi with this week's edition for the options outlook, basically recapping last week and looking into next week. First, let's start with today, Friday, 8/22, 2014. I'd like to revive my statement from a few weeks ago that much has happened, yet nothing has changed. I love it. Fed event is come and gone. Everybody yacked, and markets were crazy reacting. Bizarro day again, chop fest to begin with in the morning, and then chug. What happened was initial reaction was down. VIX is up 5%. Volatility index, fear index, also people call it. Then breaks down red, and then it goes green, and then ends up closing down 2.5% on flattish markets, actually flat to down markets. Strangely, yesterday we had a good market day. Momentum stocks red. Today we had a bad market day. And momentum stocks were green, and they started ripping first. And also, small caps were leading down at first, then flipped and led back up. Defying SPX did nothing, stayed flat. The Qs were down, were up. They first down, then up again, and they didn't know how to close. The close was kind of ugly, except for one guy, Apple, or girl. To me, it's a guy. Apple closed strong, started the day strong. It was the only one that started strong. And without Apple today, markets would have been in terrible shape. But it's a heavyweight in the indices, therefore it saved the day. Okay, that was the day. The day was bizarro. And the week, it was overall positive. And let's look at the week here. If we can do this one, will probably give us the week. Okay, the week was positive, obviously. And the SPX ended up the week green, and that's, I believe, quite a few in a row, three of them. But now we're back to the battle zone. So I'll tell you what I think of next week is first. RUT, which is a small cap, one of the indicators of the small cap. This week was a great win for us. We did an iron condor. Theoretically speaking, we announced it actually on Monday. I said these are good ranges, and a whole bunch of people followed. Again, working on a nice trend, but look how choppy it's been. So, in you know, I like to trade it unless I don't have good enough levels. For next week, I don't have clear enough levels. Another version of it would be the IWM. Next week tells me a little bit more about what's going on. Let's start there. IWM is a good trade for next week. It's going to be a battle zone at 115, which is about where it closed. It tells me that the bears don't have the upper hand. The bulls have some sort of an upper hand based on the open interest as of early this morning. I won't get the refresh until Monday morning before the open. If I were to guess, I'll be a little bit bullish there, but I can do an iron condor, but leave myself room on the upside and the downside. So these are trade ideas. The SPX, let's go back in that, otherwise I'll forget. The SPX is, I would short it a little bit with a little room. And maybe I wouldn't do the weeklies because part of next week is it's going to be heavy economic activity. We're going to start by Monday. We're going to have Monday we have real estate, Monday and Tuesday I should say, and then most importantly I think the GDP at the end of towards the end of the week. Thursday I believe GDP, that's pretty important. And also Friday we have a couple of sneakers which people don't pay attention but they can move. So PMI and PCE. So basically price, so important for Yellen. Anyway, two standard deviations if you're playing the week, if you can still get some credit spread premiums. If not, pass. You don't have to trade everything every week or go out longer. You can trade the SPX via monthlies. So this is the quick recap on the indices. I think Apple is going to be a challenge next week. It looks like the options market, the bears want to fight it, and they might. So far, it looks good for the bears from the open interest standpoint. That doesn't mean they're going to win. It just means that's what I think, how they're lined up to fight. But they could be fighting, just rolling over bad positions from this week. It broke apart over the 100, and then it looked like it was going to break down a couple times this week, but luckily it saved itself. Google, I haven't touched. I don't have clear lines of movements on it, so I skip it. Back to the SPX, 1950 to 2000 looks like the range where they're going to play based on what the open interest at the open today. That's what I think, where I think they want to play. So I don't see any breakout completely without or breakdown without headlines. So now what are we back to doing? If you can get from all of this, if you follow me long enough, you know my thesis. We have room to go, but nowhere to leap big time, and no disasters unless we get a new shoe to drop. So I want to still go along something if I can, or start by going short some other things that are extended, including the indices, but give them room and give them time, and not necessarily trade the weeklies. So find trades and hedge them. I would short a little bit and hedge, short a little bit and hedge. So this was the plan. Last week I had a few shorts like LinkedIn, Tesla, I think, and they were both winners first couple of days of the week. LinkedIn today popped 3.5% or something like that, and I don't know why. I'm still short it, so obviously I'm a little red there. But I had a great move. I booked some Tesla, and I booked some actually Chipotle short. I am still short Chipotle, but with free money, and you may have read the recap on that. So anyway, be cautious. Don't be overzealous. If they're giving you a lot of premium for a credit spread, chances are there's a reason for it. Um, so don't be tempted. The triple Qs also can be looked at, and they have a pretty, pretty big fight coming up at around the 95, 96. This is Nicholas Shaheen again with Create Income with MarketPi, and I will talk to you next week.